Talk About It Tuesday, and I have a great strategy question. And very few people think about this, so I love the question. Should we develop an exit strategy, and why is it important to do so? All right, so let's talk about this exit strategy. What in the world is an exit strategy? So it's just what it sounds like. It's how you get out of things. And so, but it's twofold, right? It's not only how you get out of things when things go bad, it's also how you get out of things when things go the way you planned. And why would you need an exit strategy for when things go as planned? Because nothing lasts forever and no one lives forever. And so, to give you an example, if I wanted an exit strategy for, say, real estate, right? Obviously, we can see short-term exit strategies on a buy and flip, right? And so, if I want to do a buy and flip, it's going to tell me exactly what market to buy in, where, what type of property, what type of end-use buyer I'm going to look for, what type of things I might have to put into the property to increase its value, what the spread is going to be. It's going to tell me exactly what I need to do, what I need to find, where I need to find it in order to exit that deal the way I would like to do it. Which is different from, say, if I wanted to buy and hold it, right? And then even with buy and hold, if I wanted to maximize the cash flow and then eventually just sell the property maybe when I'm much older, then what I'm going to do is not only am I going to rent it, I'm going to keep mortgaging in this thing to the hilt. I'm going to keep refinancing and pull all the money out of the walls so I can use it currently. If I wanted to pass it on to my heirs, it would be almost the opposite of that. I wouldn't pull money out. I would put as much money in so the property is free and clear so that I can pass it on and they have something that's free and clear. We see it, and then even let's the flip side of that. What if things go bad? What if the market suddenly takes another downturn like the housing crisis, the bubble we had back in the early 2000s? Then perhaps it's because I can't refinance and because it's difficult to sell for what I paid for it. Perhaps the property's upside down and I decided to do a strategic default where, okay, I'm going to collect as much cash flow from rent as I can, but I'm not going to pay the mortgage anymore. And I'm going to just, forestall the foreclosure as long as possible so I can get my money back out of it and then let them have the property. Those are exit strategies. So those are exit strategies when things go well, exit strategies when things don't go so well. Examples of that with stocks, right? You can do, let's say you want to, again, maximize cash flow. So you'll choose a growth stock that's going to get rapid increases in value. And your exit strategy is, okay, when I hit 60% return or 100% return, whatever your number is, I'm going to sell this thing and take the cash. But if this thing drops, I'll use what we call a stop loss. And so if it drops 20% below or whatever your number is, what I paid for it, then it's going to automatically trigger it to sell so I can stop my losses. Those are exit strategies. You do the same thing in business, obviously. If my exit strategy is to get a property, not a property, I'm sorry. If my exit strategy is to build a business to sell, so say I have some type of app or something and I want to sell it to one of the tech companies, then my whole goal is to drive sales and users and gain users for this app so that it looks appealing to, a big company that wants to buy it, which is different from if my exit strategy is to, use it until that becomes obsolete, make money myself until it becomes obsolete, where I put all my money into my systems, right? As opposed to just trying to drive rapid sales. And in the business, okay, if things aren't selling at a particular time, then you shut down the business. So you see, it's critically important. You start with an exit strategy because that'll tell you how much time, energy, and effort to put in it, where to put that time, energy, and effort, how long you plan to do that, how much investment you plan to put into it. And on the other side, you have to have an exit strategy for when things go wrong so you can cut your losses. And most people don't do that. So, that's a great strategy question. I love that question. Leave some comments below, like, share, and keep the questions coming. And I'll see you next Tuesday.